of your year-on-year growth, is this largely because of that demonetization effect still?
Yes, I mean, last year, till about end of first quarter, we had seen the effect of demo in our operations on two fronts. While we had the sanction limits and drew down the funds as well, we were unable to disburse to the borrowers because they couldn't withdraw the cash. So that's the reason it impacted our disbursement. The second, the focus was also on collections and getting the discipline back in the field. So the customer acquisition was given a lower priority. So what you see in this Q4 of this year is a healthy customer acquisition of 11 lakh borrowers. Backed by, and we have been consistent right from day one of D1 that demand in this segment cannot be fulfilled by anybody else. There is no alternative except microfinance companies. So that hypothesis that we maintain has been proved in Q4.
Mr. Rao, morning. Tell us a little bit more about the numbers, especially what's led to this kind of strong customer addition number that you've seen in Q4. And what really is the outlook going forward? Do you sense that from henceforth also you could continue to see these kind of strong customer addition numbers? And also if you could share, what the customer profile has been, what are the kind of cash flows that you're currently seeing in each of the profiles?
So all of our borrowers are, don't have any income to report and things like that. They all do small businesses, taking a loan from us, buying a buffalo and selling the milk, taking a loan from us to run a small kirana store or a tea stall or a vegetable vending shop or, an auto repair shop. The rural growth story is still on. It continues to be buoyant. 50% of our new customer additions are first-time borrowers to the MFI segment. So instead of borrowing from a money lender to probably start a business, they have chosen to opt for the microfinance route. So we believe that given the huge demand-supply gap in this microfinance space, the customer acquisition rate will continue to be robust for us, especially because we have the feet on street, the loan officers on the ground. And given the fact that they are equipped with tablets and we have eliminated paper in the customer acquisition process, they are getting more efficient in terms of customer acquisition. Earlier, they had to fill reams of paper and that was taking most of the time. Now it's all just click of a button on the tablet. So that is making the customer acquisition process much easier. Onboarding customers will become much easier. So that is resulting in a huge increase in customer acquisition. Having said that, we continue to be conservative on ticket sizes. We continue to be conservative on whom we lend. So each of these customers goes through the credit bureau check process. And we are very, very stringent on our parameters for new customers onboarding.
Right. Mr. Rao, now that you've put things into perspective, you've set out an FY19 medium target, a very strong one at 45% on a year-on-year basis. What gives you this kind of confidence of achieving these numbers?
So, like always, while we know that there is a huge demand-supply gap and we can grow even at 70-80%, our market can absorb that growth, we continue to maintain that we will grow at 40 to 50%. Backed on a customer acquisition of 30%, fresh customer acquisition of 30%, and a marginal increase of ticket size as customers graduate from one cycle to the other of about 10-15%. That is how we see this growth coming in. And like always in the past, we have been confident of this growth except for last year because of demonetization. We have been growing at 40 to 45% and we are extremely confident that we will continue to grow at this rate this year as well.